But congratulations on mastering step number 4. Now we're moving to step number 5. So for step number 5, we're talking about credit cards and loans. Now, first of all, I want to mention I am no financial advisor. So I'm giving you suggestion through my experience. I'm not here to advise you in any way, any sort. So I'm just only I'm sharing my experience. First of all, you need to understand about compound effect. Now, you got to compound effect positive and negative. The positive is when you deposit money into your bank account, and after a certain amount of time, you will receive interest from your for your deposits. The negative compound effect is when you have using your credit card and you make purchases. With that purchases, create a balance, and the credit card charge you interest on your on the balance. And the more you pay gradually, the more your credit card costs you more because there's interest on top of interest upon interest. Now that's another definition we need to also make you aware is you have a bad debts and good debts. Bad debts is when you purchasing a holiday, a car, anything you basically doesn't give you any benefit at all, basically, because you just spending money on the credit card and that will create a debt for you. Now, if you use your credit cards to buy an asset like a property, maybe you publish a new book like I did. Every time I sell my book, I'm making money. I get royalty. So that's make me money. So that's not a bad debt, but actually it's a good debt because I actually making money from the credit card. So of course, yeah, I still have to pay the balance and I still have to pay the interest, but at least I bought an asset. So that's the most important to say to you. Um, so how can you, if you got a lot of debts currently, what can you do? The best strategy you can do is you need to write it down yourself into the piece of paper. Each all the credit that you owe money to, what is the interest rate? What's the minimum payments you do every month? And and from there you have a better vision how's your debts. Um, Try to reduce or completely extinguish the debts with high interest rates and the one you're paying on a monthly basis quite high payments. So I'll give an example. Say for example your credit cards charge you 50% or a loan 50%, you pay £190 a month. Now that's quite extortion. So what you're trying to do is pay as quick as possible there because one it will improve your credit score. Secondly, you will have much more money in your bank account. That money now you save, you tackle to the next credit card or loan and got high interest rate, high repayments. You try to repay that quickly, that one. So that way you can reduce even further your debts. That way you have more cash available in your bank account. That's what I did. And after that, two debts. And I pay 3 months before they should be a completed payment. So I pay 3 months earlier than I'm supposed to pay them. So that way help me a lot of managing more of my finance. I will have more money in my bank account. And if you've got a lot of debt, don't worry about it. Just speak to your creditors, make understand your financial situation, and that way you can pay what you can really afford it. And take one debt at a time. Pay everybody the minimum payments, but start to say, okay, I'm gonna pay off this one, then I'm moving on to the next one. And bit by bit, you will definitely be in a better financial position. If you can find the credit card and give you 0%, then even better because you can transfer the debts to the other credit card at 0%, and then make sure that you pay off that one so that way it doesn't charge you interest as well. So there's a lot of strategy. I mean, it's not number five. I'm going to talk about more what you can do basically. to improve your financial. So if you read the number step number 5 in the book, it will give you a lot of insight how to improve your financial. Now, very briefly, I will mention if it doesn't affect your job, uh, you can do also as well an IVA, but as long as it doesn't affect your employment, and also you don't want to, for example, invest in property. Um, Bankruptcy is not really an option because it could really make your life much more difficult. So everybody's different. I wouldn't, you know, I rather prefer, for myself, I just get on pay what I have to pay and I reduce it. So that's teaching you how to be better financially. Anyway, I'm gonna move it on to step number 6, and